The Rebel Capitalist Show.
I'd love to do that right now. Just kind of broad strokes, what you're thinking about in terms of oil, gold, and maybe Bitcoin. Let's start with oil. I mean, you're an expert there.
Okay. So crude oil was rallying really hard, V-shaped recovering from the coronavirus crisis. Got up to, and I had, I'll credit myself for predicting this pretty darn accurately. I said, watch for that rally to stop somewhere between $41 and $42, which is exactly what it did. That was back on the 23rd of June that we kind of topped out there at 41.63. It has just once on the 21st of July moved higher than that to 42.50 or so. And I think the reason is that the gap fill on the September chart, we rolled over onto the, from the August to the September contract, and that gap fill level was a little bit higher. But we haven't gotten above that, and we've been treading water at the same level. I've been expecting oil prices to correct lower because I'm convinced at the time what I was saying is I think a second wave is coming. Well, that was more than a month ago. Of course, the second wave is very, very clearly upon us. It's already here. To my own surprise, even though my prediction was confirmed, we do have the second wave of the coronavirus crisis very clearly upon us. We're to new records in daily new infections in the United States that are double what the old records were. We've really got an issue here. But the thing is, at the same time, we've also had some very significant drawdowns in inventory. So the storage crisis that people had feared in terms of U.S. Commercial oil storage, those risks have abated quite a bit. Okay. And we've also, OPEC has begun to taper back their accommodation, but only by a little bit. And we've also got things like tropical storms that are always positive for oil, kind of holding things up. I feel like maybe finally, after a month of treading water, we're in for some weakness here. I think there's still a dip to come in oil prices. But where I thought a month ago that we were headed, okay, we went too far up. Now it's time to go have the other pendulum swing too far down, back down to say $20 to $25 on West Texas Intermediate before resuming an uptrend. It just feels like this market's got too much resilience in it for that, and we've burned off too much of those supplies. Meanwhile, I talked to a guy like Art Berman, who I know you've interviewed. Art's saying, look, we're going to have, over the course of the summer, we're going to have some completions of uncompleted wells. There's going to be kind of a booster shot to U.S. production that's going to help keep things going. But eventually, the massively depleted rig count and frac spread counts are going to catch up with us, and we're going to see a sharp decline in U.S. production. It's going to drive prices much higher. Wow. What Art and I both thought last time I spoke to Art about 2 months ago was, okay, here we are at $41. We managed to get here. We're going probably knee-jerk back down hard, but then when we go up, we're going to go up big. Much higher, not just back to 40, but maybe back to 60. Okay. And we thought by the end of the year, maybe by Christmas, we might get up to, $55 plus on West Texas Intermediate. I'd say that the way that my view has changed, I still think that basic story is in play. The thing is, the weakness that we thought might get us down below $25, I'll be impressed if we get down to 30 again. Certainly if we touch 30, I think that's time to be buying, not selling for sure. I'm already long time spreads in crude oil. I'd like to add to that position. I'm hoping for some weakness in the market so I can add to a long, not because I'm short, but because I want to add to my longs at a better location.
Got it. Okay, gold, silver.
Gold is really interesting. We got to the daily close over 1,800, which I thought was going to ignite a big rally higher. And for a week or so, it was like this delayed reaction. We had that technical signal that should have ignited, and it was just sort of lumbering along. And I'm thinking, boy, is it me reading the chart wrong? I was really expecting it to take off. Then all of a sudden, when it took off, boy, did it ever take off. Well, we've moved up so much, so quickly. We're back to new all-time highs. Uh, there's this formation in technical analysis called a cup and handle pattern. So if you look at what's happened since 2011, there was a peak. There's been this big cup in the price chart that goes, from over here, it goes all the way up, and oftentimes you get this handle formation where what we might expect is, okay, we retested the all-time highs. Now it's time to drift down $100 or $150 for the next 6 months. And then after that, it really takes off and there's a moonshot higher in price. That's probably my base case as to what happens. But if you look at monetary policy and just how strong the argument is for why to be bullish gold, it might just skip the handle and go straight up from here. On the other hand, if we had a really big upset in the presidential election, which I think is quite possible, I think we could have a big argument about delaying the vote. I think there's likely to be a huge amount of argument. Whoever wins is going to insist that it was a miscounting of the vote, or I should say, whoever doesn't win is going to insist that it was an unfair election and so forth. If that really started to cause a major dislocation in the stock market to the downside, let's say there's a Democratic sweep, which is probably not good for stocks to start with, and then there's a huge amount of uncertainty because everybody's suing each other and claiming the election was unfair and we have to, vote again and all that kind of stuff. If you had a really big downside dislocation in stocks, even though in theory an uncertainty situation like that should be good for gold, if it started to pull gold to the downside, you've got so many weak hands in this market because it's gone straight up without any technical corrections. If that big technical correction got started, it could really take off to the downside. So I do see significant risks, but I think the most likely scenario is maybe $100, $150 of downside to kind of form that handle, and then big upside after that. Maybe straight to the big upside, maybe big down before the upside. But if there's the best scenario for gold investors, as far as I'm concerned, is the big down. That's your opportunity to really load up. Because if we got back down to $1,400 from here, oh boy, I would be backing up the leverage truck to buy a whole lot of gold there. To get excited about really adding to my existing positions here at $2,000 or whatever it is, when we were at 1,300 just less than a year ago, we've moved a lot. It's to move when you're already to add to a position when you're already this far along, when there haven't been any technical corrections. It's kind of hard to justify. On Bitcoin, I don't really have anything to say other than I think what's driving the current strength in Bitcoin is the same thing that's driving the strength in gold. I respectfully disagree with the Bitcoin maximalists who think that gold is a relic and Bitcoin is the new thing. I think ultimately in the long run that we're going to discover that digital currency is the way of the future. Bitcoin, kind of like the Wright Flyer, the world's first airplane. It's where it all started. You'll never ever forget Bitcoin. But does that mean that Bitcoin is still going to be? We don't fly around on Wright Flyers today. We got Boeings and Airbuses. I think technology will bring us better digital currencies. So I don't think that Bitcoin is the new scarcity asset for all time by any stretch, but it certainly is the popular trend right now. It's what younger people favor instead of gold as a safety asset that is favored in a condition of devalued fiat currency. Fiat currency systems all over the world, including the US dollar, will continue to be devalued in terms of their real purchasing power. That means gold and other scarcity assets are going to do well. That means Bitcoin will continue to do well for now. I have to admit, Bitcoin has lasted quite a bit longer than I first expected it to. Maybe I'll be wrong, and it really will become the de facto asset of the next 100 years. I don't think so. I think there's better distributed ledger technologies that overcome some of the shortcomings of Bitcoin's design that are better suited. But certainly the network effect that Bitcoin has already established is formidable. So
Mhm.
we'll see what happens. But in one way or another, I'm not going to make a bet on gold versus Bitcoin, which one wins better. The much easier bet to make is gold and Bitcoin win over US dollars and other fiat currencies.